Happy Sunday, and we are doing a little bit late of a video today. Normally there's not much news on Sundays, very few, like 3 maybe 4 articles max, and I do a lot of my other content today, sometimes that I post during the week. This week it's going to be really touch and go. After the kids go to bed tonight, I will be doing a couple of videos on crypto projects. So because this week we are traveling a lot, so trying to get in between a little bit smaller videos so we can get content out to you. You may not necessarily see a news video this week. However, we are going to try our best to do that. I think our worst day is probably Thursday and Friday. So you may not get a news video that day. You may get one tomorrow, Tuesday and Wednesday. And then back on again on Saturday. I haven't quite figured it out yet, but we do have a busy week. And let's get started into news after the intro. So, I love the intro. It makes me happy every time because I worked really hard on it. Anyway, guys, news via Crypto Potato. Let's see if I can get my mouse back on this screen. Would be nice. Thank you. Lightspeed Venture launches a blockchain-focused team. Multi-coin capital raises $430 million. Zhang or Huang, I think Swing. I'm not too sure. I'm not good with names, guys. The ongoing crypto winter has been far uneasy for investors, but for true believers of the new technology, it seems like time to double down with their efforts on high potential projects. Fintech focused US VC firm Lightspeed Venture partners announced the launch of a new blockchain-focused team, Lightspeed Fraction, to invest in early-stage blockchain projects. The news comes along with Lightspeed Venture partners unveiling 3 new U.S. funds that have in total raised $6.6 billion and a $500 million fund focused on Indian early-stage startups. At present, the VC firm has $18 billion worth of assets under its management. The decision to bet big on blockchain companies corresponds to the investment thesis that the tech, quote, is changing how network participants are incentivized, how startups within this ecosystem are funded, and how communities can coalesce their shared power to create change, end quote. Or coalesce their shared power to create change. The firm said the VC began investing in cryptocurrencies in 2013, regarding digital assets as a key technology that offers unprecedented opportunities to the, quote, underbanked or unbanked, end quote, population worldwide. Lightspeed's partner Ravi Matiri said, quote, we believe the industry is still early in the transition from Web 2 to Web 3, which I believe it is. However, I have seen other big tech people already talking about Web 5, and I'm like, okay, we went from Web 2 to Web 3, now we're at Web 5. And what happened to Web 4? So we're still early, guys, into Web 3. So let's not even talk about 4 and 5 and 6 and 10, like way down the road. Let's just get to Web 3 first. And the collaboration between Lightspeed and Factin is a testament to our shared belief in the ways that cryptocurrency may help to develop a web that better serves underserved people around the world, end quote. On the same day, crypto-focused VC Multicoin Capital also said it had raised $430 million for its third fund for blockchain startups. The amount has jumped 4.3 times from the $100 million it raised in its second fund. The firm began raising the fund in the fourth quarter of last year and closed it in January of this year, according to a media report. Further, early stage companies are expected to receive $500,000 to $25 million, and later stage projects could get $100 million or more. It's worth mentioning that Multicoin Capital co-founder Kyle Samani and Tushar Jain are the fund's largest limited partners. Samani noted that the current bear market does not change the company's strategy of investing aggressively in Web3 and blockchain companies. In terms of the troubled firm 3AC having a stake in one of Multicoin Capital's funds, making people wonder if such exposure could cause financial stress to the venture. Samani clarified that it had, quote, absolutely no impact, end quote, on MC or Multicoin. Pretty interesting. I mean, this obviously is the time to build, and I am very heavy into Ravencoin, and of course Ravencoin's like 2 cents right now, and at its all-time high it was 28. So a lot of people are upset, and obviously things can get heated. I mean, I've seen heat across all groups that I am in, ETH included, Bitcoin included, and it just means that people get upset because obviously their money's not there, or they may have lost money in their investment, and just remember that everyone is in this together. Web3 is not like Web2. And obviously things will hopefully, fingers crossed, get better. And if it doesn't, then we take this and we learn from it. But in my opinion, and this is solely my opinion, it has to get better. Of course, stormy weather may not be clear for a while, but in the meantime, try to be nice to one another and continue to just build. And obviously if Multicoin is wanting to build, then they see a future in this, and I've seen other VCs just put their foot down and be like, we're not going anywhere, we're still going to help. So I think, you guys, it's just time to build, and we'll just figure it out as it comes and just kind of go from there. Solana-based move to earn app STEPN generated over $122 million in profits in quarter two, written by Shiny Kateka. Solana-based move to earn application amassed $122.5 million in profits through its platform fees in quarter two 2022. According to the official announcement, STEPN plans to use 5% of the profits generated to commence a Q2 GMT buyback and burn program. It says that GMT and sneakers will be a part of the program. STEPN also revealed that the entire process of the buyback and burn program may take a few weeks to complete to avoid triggering abrupt volatility in price. Alongside the platform will also allocate capital reserves to ramp up its existing features and build out the team. Branding also remains one of its top priorities as it looks to deploy a portion of the profits towards the deployment of its physical merchandise line for marketing purposes. The goal is to enhance overall brand awareness and adoption. STEPN previously suffered multiple distributed denial of service or DDoS attacks to prevent such incidents. The platform said it will double down on security and server enhancements, with profits realized in quarter 2. Improvement with regard to its STEPN's model for anti-cheating, a system that aims to eliminate fake users from and prevent fraudulent motion data on its app, is also one of the key areas of fund deployment. The move to earn model is rapidly becoming a major hype, which has contributed to the growth of platforms such as STEPN. In April, Crypto Potato reported that its native coin Green Metaverse Token, or GMT, which I didn't know that's what it meant up there, gained more than 30,000% since its token sale was conducted on Binance Launchpad. The self-proclaimed Web3 lifestyle app has seen tremendous growth in terms of the number of daily active users since its public beta launch in December of 2021. Despite the success, it backed out from mainland China due to mounting regulatory pressure. The platform announced ceasing IP and GPS-related services to users from the region. The deadline is set for July 15th. The STEPN team issued a clarification saying it ruled out any business or offered any means for people to download the app within the jurisdiction. Its founder, Jerry H., said Chinese clients only account for 5% of the game's total user base. Hence, a ban is not expected to have any significant impact on the business. This seems pretty cool. I've actually never heard of this. So, after this, I will probably be looking into it to see what it is all about. Let's see. Price analysis. Weakness in NFT spills over to blockchain gaming, again by Jay Huang or Sang. I'm not too sure. Monthly returning buyers of Ethereum-based NFTs bounced back to 45,000 in June after seeing less than 35,000 in May, according to blockchain analytics service Nascen's quarter 2 NFT report. The firm analyzed 6 indexes of NFTs denominated in ETH, finding that the gaming index got hit the most, 59.6% down from the beginning of the year. Meanwhile, blockchain gaming giant Axie Infinity experienced a sheer decline in its user base by 83% in quarter 2, while blockchain games' overall volume of unique active wallets, or UAW, only fell by 7% during the same period, despite the notable weaknesses across the broader market. Nascen's report tracked 6 major marketplaces hosting ETH-based NFTs, noting that the weekly trading volume only reached 600,000 ETH in June. In comparison, the previous month record around 1.3 million. During a turbulent period, the trading volume for such NFTs was back to blue chip collections, as investors tend to take cautious approach, said Louisa Cho, research analysis at Nascen. Quote, ETH inflows and circulations are concentrated in blue chip or large cap NFTs. With the NFT market, such a phenomenon hits at the risk off attitude among NFT market participants, end quote. The well-maintained interest in renowned projects is shown, in which CryptoPunk number 4464 was sold for 2,500 ETH on Tuesday, equivalent to over 2.6 million at the time of the sale. In terms of ETH pricing, this NFT ranked as the 4th largest CryptoPunk NFT sale of all time. However, the report also indicated that limited liquidity in the NFT market suggests the slow recovery in June may not be sustainable. It is partly demonstrated in the drastically declined interest in the gaming NFTs, which function as virtual assets for various blockchain games. The broader bearishness of crypto assets, as well as the drop in NFT activity, have caused an extended impact on the sales of gaming NFTs, according to DappRadar's Q2 to Game Report shared with Crypto Potato. Quote, organic sales of gaming NFTs fell 29% compared to previous quarter, while the price of in-game assets was also negatively affected due to the fall in value of many game-related cryptocurrency tokens, end quote. Why can I not say that? I can't say it today, guys. Nevertheless, the report found the sector in strong resilience compared to the on-chain DeFi and NFT activities, which respectively dropped 17 and 24% quarter over quarter. To put things in perspective, gaming dApps accounted for 52% of all blockchain activity by the end of quarter 2. Among all top blockchain games, Axie Infinity witnessed a collapse of its user base by 83% in the quarter due to the over $6 million exploit that led to its crumbled credibility. Splinterlands remained the most played blockchain with 283,729 active wallets at the end of the quarter, as Alien Worlds ranked second. I've never heard of Splinterlands. I've heard of Axie Infinity and I've heard of Alien Worlds. I have never heard of Splinterlands. If you play that, guys, comment below. I want to know what this is. I've never heard of this. So as Alien Worlds ranked second, whose number of active wallets fell by 4% in quarter 2 compared to the previous 3-month period. Additionally, games based on blockchains other than Ethereum experienced rapid growth despite unfavorable market condition. Sunflower Lands on Polygon had its active wallets increased by 10,000% to over 11,000 users, and GameTA on Solana ended the quarter with more than 30,000 active wallets, dApp Radar noted. So I am writing this down. GameTA and Splinterlands. I've never heard of either of these. So I'm taking it Splinterlands is an ETH based and GameTA is obviously Sol based, because it says that, and I haven't heard of Sunflower Labs either, or Sunflower Lands, sorry. I've got labs on my mind because I was reading yesterday on Twitter that Yuga Labs was trending, and I was like, why is Yuga Labs trending? You know how if you look at Twitter on the desktop, it has on the right hand side what's trending, and Yuga Labs was up there, and I was like, why? So I clicked it, and I guess they had their blockchain chain based game Other World or Other, I don't even know what it's called because I'm not involved in it, but they had a like meetup game something, I don't know, and some people were sharing videos, and I guess it was like 13,000 people were like tweeting about it. I don't even know. But if you're interested, type in Yuga Labs into Twitter and it should show up the biggest tweets, and you could see the video game. Proof of work and proof of stake are crypto versions of fossil fuel cars and electric vehicles, ECB report, which is pretty interesting. Xander should really be reading this because I am not a miner. He's a miner. I am not. So maybe I can get him to do a video after the kids go to bed to talk a little bit about his feelings on this. So this is written by Mandy Williams. The European Central Bank, or ECB, has voiced concerns about the significant carbon footprint of proof of work mining, while hinting at possible ban on such crypto assets, including Bitcoin, by 2025. In a paper published earlier this week, the bank's researchers argued that Bitcoin and Ethereum have a significant carbon footprint and consume similar amounts of energy annually to mid-sized countries such as Spain and Austria every year, which is interesting because, as you know, I have done, if you are not new to this channel, I did a video, I would say about a month ago, maybe 6 weeks ago, about renewal blocks, which Xander is the CTO of, and I did say that, full disclosure, obviously I want renewal blocks to go well, but they are working on renewable Bitcoin mining. So if you are interested, go back, and it should be under the playlist of crypto projects. And we kind of go over what renewal blocks is and how to sign up as an investor with them. So just want to put that in there for those of you that are newer to this channel, because since then we've had a little bit of an uptick in subscribers. So if you are wanting to know, there is that. The experts also talked about proof of stake, a consensus mechanism that addresses the energy consumption issue of proof of work, according to a report. A proof of stake-based cryptocurrency would only require the same amount of energy consumed by a small U.S. town of about 2,100 homes. The paper noted that Bitcoin's benefit to society is doubtful, but blockchain may have potential merits and use cases. Using an analogy, ECB experts describe proof of work as the crypto version of fossil fuel cars and proof of stake as electric vehicles, adding that, quote, "It is difficult to see how authorities could opt to ban petrol cars over a transition period, but turn a blind eye to Bitcoin-type assets built on the proof of work technology," end quote. The researchers stated that authorities must decide whether to encourage the use of proof of stake or restrict or ban proof of work. Although blockchains such as Ethereum are already working on transitioning from proof of work to proof of stake, which they said was going to happen in September. However, I have seen it push back. So we'll see. With the process expected to be completed by 2023, ECB experts believe that it is unlikely for Bitcoin to migrate to proof of stake soon due to the lack of community consensus among its stakeholders. Nonetheless, the paper stated that transitioning to renewable energy requires political and social choices on energy sources and consumption. According to the experts, such decisions from policymakers would favor some activities and pose risks to value of crypto assets. Quote, "It is unlikely that Bitcoin investors have currently priced in the negative ecological externalities and possible policy measures." The report also argued that proof of work-based crypto assets are incompatible with environmental, social, and governance, or ESG, objectives. Thus, investors must examine if investing in specific cryptocurrencies align with their ESG investment strategy. This is precisely why electric car manufacturer Tesla stopped accepting Bitcoin as payment for goods and services in May 2021. According to Tesla CEO Elon Musk, the company would resume BTC payments once Bitcoin miners start utilizing more than 50% green energy for their operation. Meanwhile, the ECB recently called for urgent regulation of stablecoins after the crash of Terra's algorithm stablecoin UST. However, the proposed MiCA laws, which would regulate cryptocurrencies and possibly ban proof of work mining, have a new target date of 2025. Again, I'm not a miner, so I can't really speak to that. And there is one more. Long-term Bitcoin holders did not sell amid the market crash, which I knew wasn't going to happen anyway, because Bitcoin holders that believe in Bitcoin, most of which are Bitcoin maxis. I would consider myself a Bitcoin maxi because I like cryptocurrencies. I consider anybody who likes cryptocurrency Bitcoin maxis because most of us hold some type of Bitcoin. Long-term Bitcoin holders have not disposed of their holdings into the market weakness, as short-term speculators are mainly responsible for the heavy selling that exacerbates the asset's nosedive, according to Coinbase's latest monthly report. Miners and crypto firms that are forced to liquidate their positions to stay solvent amid a liquidity exodus have shown that the industry is in a credit-related risk rather than a crypto-specific crisis. The paper also noted, titled "The Elusive Bottom." The report looked into the overall market condition in June as the primary cryptocurrency revealed signs that it was near the bottom. According to on-chain data, holders who held Bitcoin for more than 6 months still accounted for 77% of the 21 million Bitcoin ever available to be mined, despite a slight drop from 80% recorded at the beginning of the year. It demonstrated a relative strength of the asset as the ownership percentage by long-term holders exceeded the 60% level at the peak of the previous cycle in December 2017. The report viewed such a phenomenon as a positive indicator of true believers, less likely to deepen the selling pressure during turbulent periods. Notably, the ongoing bloodbath has been primarily driven by the Fed-induced rate hikes. I agree with that as well. And over-leveraged crypto firms, as we see with 3AC, as well as miners being forced to offload their holdings when their loss in value collaterals were at risk of liquidation. The report argued that CeFi lenders drastically increased their short-term debts when the bull market was in reign. They took huge loans from DeFi protocols and lent the capital to counterparties that paid even higher interest rates, which we see are now falling, i.e. Celsius filing for bankruptcy and Voyager as well. Some counterparties had duration mismatches and heavy hypothecation of assets in their books, which were lent to crypto hedge funds and other entities. The snowball kept rolling until the violent correction hit the market, leading to a heightened contagion effect, quickly spreading across the market. In particular, the OTC trading desks were largely responsible for the liquidity squeeze that forced margin calls or outright recalls on some of the loans. Quote, "Those OTC desks tend to expand their balance sheets and facilitate trades by borrowing uncollateralized to try and maximize their capital efficiency. Such uncollateralized loans would be made on the basis of these OTC desks' on-chain and off-chain credit data. Nevertheless, when these loans are repriced or recalled, the desks are forced to show their clients wider bid asks spreads or smaller trade sizes," end quote. Compounding the ongoing credit crisis, publicly listed miners who had taken huge loans secured by Bitcoin holdings or mining machines during the bull market were compelled to sell their positions amid falling asset prices. However, since the top 28 public mining companies only represent 20% of Bitcoin hash rates, their sales will not drastically affect the trading volume. Quote, "Even if the Bitcoin price were to go to $10,000, they would need to liquidate 16 Bitcoin from their reserves to pay the gap every day, which means they can last approximately 120 days. We think that would be unlikely to have a material impact on the price given that there is approximately $6 billion in average daily Bitcoin volumes on exchanges. In the context of the Fed committed to raising rates to fight rapid inflation, investors tend to withdraw capital from DeFi protocols to seek higher yields from traditional finance. The impact is shown in the decline of the total market cap of stablecoins, dropping from $162 billion in early May to $149 billion at the end of June. $12.6 billion of capital may have left the crypto ecosystem due to the chase for a higher yield, considering the CPI index for June hit 9.1%, much above what Wall Street expected. The Fed is set to follow another 0.75% hike this month. As such, stablecoin outflow is expected to rise accordingly. Not surprised, guys. I mean, it's just really a bloodbath right now, and keep your guys' stuff safe and be sure to get your stuff off exchanges. Is that percentage rate worth it every month? At one point in time, I would say yes, because 9% a month is really nice, or 10% a month is really nice. However, is that sustainable long term? I don't believe so. But again, my opinion, and everyone needs to do their own research before jumping into any cryptocurrency, NFT, or Wall Street investments. So with that, guys, please remember to like, subscribe, hit the notification bell. Like I said, going to be a busy week, going to work on getting some shorter videos out in the queue so we can get them out for you, and have a good rest of your Sunday, guys, and have a good night, day, or afternoon where you are watching this from.